Joining me now is Portfolio Wealth Advisors President and CIO Lee Munson. Lee, good morning to you. And I want to pivot back to the retailers and the consumer with this, because really that PPI report that came out at the end of the week, as we know, producer prices become consumer prices. Do you think that these reports we're going to get this week from the retailers are going to give us any insight into that, any further insight and pick up off of the PPI report from last week and the CPI?
Well, we want to see some follow through on that. We either want to see confirmation or no confirmation. If we see Walmart and Target and Home Depot start talking about the impact of tariffs in their forward guidance, I'm not concerned about what happened last quarter. Tariffs weren't around. I want to know what these CEOs think going forward, because if they think prices are going to start hiking, and we have later this week, Jerome Powell talking in Jackson Hole about what he thinks, where the direction of interest rates are going, that could set expectations to the downside. Now, again, if I see a little correction because of this one-time inflation bump scare and we see markets sell off because there's some concern we may not have cuts in September, I want to be a buyer of any type of pullback that narrative causes.
That's interesting. I want to look at yields with you as well, because we're gearing up for the Fed minutes this week. That's going to come out Wednesday. That's going to give us a little more insight and clues onto kind of how they're thinking right now ahead of the next policy meeting, even though these minutes are prior to the inflation reports we got last week. And then you've got Jackson Hole coming up, and Fed Chair Jay Powell is going to be giving that key speech Friday at the Central Bankers Annual Symposium. So the theme is labor markets in transition. The futures market's pricing an 85% chance of a rate cut in September ahead of those remarks. Lee, what are you expecting from Jackson Hole?
Well, I don't really think that Powell's going to get in there and say there's no cuts in September, right? I don't think he's here to disappoint the crowd, so to speak. But what he is going to tell us, because he's very consistent on his messaging, he's very clear that he wants to see the data first. So we got another month to see even more data before that next Fed meeting. I think that what we're going to hear that's going to disappoint people is that despite the Secretary of Treasury's pleading of don't be data driven, just make these rates go down, I think that you're going to see Jay Powell push back on that and say, if we don't have clear data of labor falling off a cliff by next Fed meeting, we may or may not have rate cuts. And if we see more evidence, like a hot PPI that becomes a hot CPI, then we may be delayed until later this year. I just think the market will have a fit about it, but I don't think it's long-term bad news. I think we have great earnings going into next year, a one-time bump to inflation. All these are just speed bumps to forward guidance that are buyable if those things happen. I'm still bullish.
Yeah, no, you certainly are. And Mitch Rochelle, Axios has a really interesting piece out this morning. It says markets are running the rate cuts show for now. The Fed, the White House, the markets are still hoping to control interest rates, but investors may have the upper hand. And what they write here, this is interesting, is that this three-sided competition pits the Fed, the White House, and the bond market against each other. And really, the bond market's a little asleep right now in all of this.
Well, I think the bond market is the most interesting piece of it, because that's something that the Fed doesn't really have control over per se. They control the shortest end of the Treasury curve. The rest of it is a free market enterprise. And now here we have all of these trade negotiations going on, and we're not clear as to whether or not part of the trade deal is to make sure that foreign countries like China continue to buy U.S. Treasuries. So I think there's a lot of geopolitical cloud out there over the Treasury market, and I think only time will tell. But the Fed can do something about it in the short run.
Caroline, comment on that, because we're still in the middle of trade negotiations with the Chinese.
Yeah, well, I think it's very important that we get more of these trade deals over the finish line. I think Trump has proven that he is a pretty master negotiator at this. I mean, nobody thought that there would be so many in such record time. With regards to the Fed, I hear what he's saying about needing those numbers first before expecting Jay Powell to move. I know he's been accused of political activism, but I think it's fair to say that if the CPI numbers are too hot or other numbers are too hot, you don't want to unleash more inflation by cutting rates. And as a Gen Z, I can say that my generation is very sensitive to mortgage rates right now. We want those rates to come down, but that doesn't mean we should be, pushing for something that's more aggressive than what is appropriate.
Yeah, and that's where the long bond comes into play, Lee. And, the other thing, too, here is that that PPI number really, puts the Fed in a little bit of a tough spot. And I think, although the minutes are going to be interesting on Wednesday when we get them, at the same time, the story has changed.
Well, it has changed, and now all of a sudden, I honestly don't understand why bond markets are so bullish. I don't know why investors believe that they need to get these rate cuts. We're going to have somebody that's Trump installed in May that's going to be dovish, that's going to go right in there and cut rates. The question is, what's a real function of having those rates drop in any material way between now and the end of Jay Powell's reign? I think longer term, when you look at the intermediate, you look at earnings, where we are, whether monetary policy is really restrictive. I hear Gen Z on the mortgage rates. I totally get that. But on the other hand, if we just get a slight moderation in growth, I'm not talking about a recession, slight moderation growth, you'll see the 30-year Treasury start coming down a half, 75 basis points. You can make money on that trade, being a contrarian.
Well, I always tell Caroline Downey we're rooting for her generation. We really are. We're here for you. Lee Munson. Thank you very much, Lee. Good to see you as always. Appreciate it.